foreign market traded both sides of the support and resistance handles as weather continues to loom as a potential catalyst to break us out. But again, technicals remaining very strong. Key resistance 393 to 395. The bulls need to get a close above this pocket to get up next leg higher. We weren't able to do that in yesterday's trade, and now that set us back towards the low of the 85. This 10-cent range has been basically the trade range for the past 2 months, and we continue to trade that until we get a breakout or a breakdown. Now, as far as the soybeans are concerned, we're obviously a little bit more pessimistic as we have been for the past 2 months. 903 to 910 remains a key target that we're looking at. 945 is the key line of resistance that the bulls need to get a close out above to kind of stabilize here. 945 represents previous support, and I think that distance going forward, a failure to break out, keeps the bears in control going forward. Weather is going to be important going forward, but again, right now as it stands, I think technicals are leading the way towards that $9 handle. And lastly, on the wheat, we really taking a hit today. The U.S. dollar bouncing a little bit, putting some pressure on commodities. 416 to 420 seems to be the technical support pocket. It's the bottom end of the range we're looking for. If you want to step out on a limb, be dangerous and be a buyer in this market, that's the pocket you're going to want to buy with a tight stop or protective puts. 435 resistance level that the bulls need to get a close out above, consecutive closes out above to stabilize this market and get us in a little bit more of an uptrend. So that's what we're looking at. That's what you should be looking at too. It's been Oliver Slope with II Trader from the floor of the CME.
Appreciate it.